Why can't I draw a line between what's happening in Washington and what's happening in the global asset markets this morning?
Well, two things. I think Eli Lake actually hit the nail on the head here. What's the crime?
Yeah.
Unless you see something that's actually going to threaten the government, what's the issue here? What we learned from this is that President Trump is predictably unpredictable. We already knew that. And this is a problem that markets have been having all year,
Yep.
is dealing with these broad political issues that it's a totally new environment for them, and they don't know quite how to react, so they pull back.
We priced in tax changes, we priced in all kinds of things that were going to come out of this administration. We've had to row back pretty aggressively on all of that. Now we don't know what to think.
But that's exactly the point. Those were things that we thought we knew. We thought, oh, tax policy, this is something Republicans love.
Yeah.
We're going to get a big stimulus package. This we know how to price. There's an economic effect for this. All this other stuff,
but will
this is much
what we've
more
observed
complicated.
in the last 15 hours, whatever it is, I mean, all the newspapers today are completely out of tune with how rapid the news flow has been. Does this overwhelm everything, where the other stuff that affects your life becomes a distraction? It just doesn't get done?
No, I don't think so. I think people have learned that there's a certain amount of noise that's going to come out of Washington. They don't quite know how to read it. They're trying to read through for the signals. And in this case,
right,
to that earlier point, what is the signal that comes out of this?
Well, speaking of signals, we talk about the euro, we talk about the yen. What's your dollar call?
So we do think that the dollar is nearing an end of its multi-year rally. It'll probably be a sort of buy the rumor, sell the fact type moment at the end of this year. We do expect you'll get some sort of tax package that comes through, hits the economy in the first quarter. That's really when the dollar starts to peak, and from there it could start to come off. Of course, if that fiscal package doesn't come through, we've seen a lot of infighting with Congress. We've seen, to your points about today, the president's ability to operate in Washington. Maybe that doesn't happen.
Okay, let's talk about something else that's happening in Washington. And I go to this chart here, which is the US 2-year, which is starting to price in the hikes that we're going to see from the Fed.
Yes.
June's a done deal, according to my work on my Bloomberg. September's beginning to look like it's increasingly being priced in as well. The Fed's telling us that they're looking through the weak data. Yeah, you can get all the politics and push it to one side. The Fed just, like, it's on rails at the moment, it seems, at the moment. So why is the dollar going to do what you say it's going to do?
Well, I think the key issue is it's not fully priced in throughout the end of the year. We see two more hikes this year. We actually think that they'll probably take a pass at June, and it'll be September and December.
Right.
Yes.
The market's got June at near 80% at this point.
Exactly. So we could see some dollar weakness over the summer, some more range trading here. But ultimately, we think that final gasp of strength will come through at the end with the rise in Fed funds rate. And you have monetary policy priced in pretty well everywhere else as well. This is one of the problems for markets, and why you see such unconvincing price moves across markets.
Yeah.
What's the divergence here that we're all looking for?